Hello, my name is Janne Muta. I'm the Chief Market Analyst for TIOmarkets, and something very interesting happened yesterday with USD. The retail sales numbers from the US were excellent. They were really a positive surprise compared to what the analysts had expected. However, markets reacted by selling USD. So why was this, and what should we understand about this? And also we're going to take a look at gold as it's trading fairly close to a significant support level. So let's go and see what we can learn from the charts. But first, as usual, please do remember that we don't provide any investment advice. And you should watch this video only if you agree with this disclaimer. Okay, the analyst expectation was 1.1% on the core retail sales and the headline number, but the amazing surprise was that the numbers came in at 5.9 and 5.3. But still, let me show you what happened with the markets. Let's go to USD yen first. This is where the announcement came, and since then the market has been selling off. How do you figure that? Market has been selling USD even though we get numbers that are very, very positive for the USD. And it's not only USD yen. Let me show you what happened with Aussie USD. This is where the news came out, and since then Aussie has been rallying against the USD, and the same with Euro. Euro hesitated for a while but then started to move higher. So why is this? What might be the reason for market really disregarding all the theory and moving higher? And the answer really is stimulus. Stimulus was the answer why we had those amazing retail numbers from the US, and this is why the markets really don't follow the theories in this extraordinary environment. So let's go and see what we have in the longer time frame, like the weekly. The market, when it was trading somewhere here, we said that if we get a dismal NFP number, the market is really more likely to move higher. And the reason again was the same, stimulus. And now the market has rallied. It has created a higher low here on the weekly chart. And if this is the way it goes, if this 20 period moving average is roughly the low for this week, then we obviously have more confirmation for the momentum to the upside, and that will build pressure against this resistance here around 25.90. I think this was, let me see, yeah, around 21.90 we have resistance there, and we might well get pressure building against it. On the daily time frame, looking at this, we are approaching a sideways area here. That was this could be a resistance between these 20 and 50 period 50-day moving averages. We might see some sluggishness there, prices approaching this level now, but as long as we can create a higher low, like we've seen before, or we have said before, that if the market just creates a higher low above this channel low here, then we have the momentum intact and it's more likely to move up. If the market breaks this, then it's probably going to go down to sort of 38.2 Fibonacci retracement level and the surrounding areas. This is what the euro looks like. Let's go and see the other markets. When USD yen was trading down here, we said that there is momentum developing to the upside, and if that momentum continues, then it's very likely to move around this area here and maybe even further, and that's exactly what happened. Now the market was trading yesterday close to that channel high and then turned lower. Obviously now we have quite a bit of distance here between the channel low and the current prices, so there is some space for the market to move lower. It is, however, trending higher at the moment, so we have a classical trending pattern here. We have a higher low, higher high, higher low, and then a higher high. So we would expect the market to create another higher low above this channel low here. but it takes probably a few days for the market to react lower, and let's see how it goes. At the moment, I don't see very clear support levels here. It is difficult to say at the moment where it might find support. Maybe it trades all the way down to the channel low and then attracts buyers, but this is one to go on sort of watch list to so that we can sort of wait and see what happens with this market. And then I wanted to talk to you about gold. And here we have gold in daily time frame. As you can see, it has been making lower highs, has been making lower lows. So it is trending lower in this price channel. But at the same time, it is approaching pretty significant support here at 1765 or so. This level here also coincides with 50% Fibonacci retracement. So if the market breaks this level and just keeps on dropping lower, what would be the next level that we should focus on? Let's go and have a little more data here. So if this level is broken and the market goes through, then the next significant support level is around here at 61.8 Fibonacci retracement, and then this low here, which is from August last year. And basically that's this is June last year, and now we have a couple of things here together, this low and the 61.8, so that's a very significant support there. But we still have obviously this market trading above this support level at 1760, 1762, 63 roughly. And if we get a rally from here, which is obviously still possible, then we have the resistance levels here. The first one, obviously, the low here is acting, it's resisting price move at the moment. But if we get a reversal and the market rallies, then obviously this level here that used to support prices, this is 1817.75. It supported the price a couple of times there, and then we have the 20-day moving average at 1828, and then if the market rallies further, it really gets starts to get really close to that channel high. So I would expect the buyers to come in. Probably the stochastics, which is now at oversold area, would probably move into this is oversold area obviously, and then if the market would rally, then it would move to overbought area somewhere up here, I would suppose so. So as usual, we don't know the future. We will let you know when we do. But this is what I can see in the charts at the moment. The key levels, the momentum. The momentum is to the downside. So it's possible, as we are getting these lower highs, that the market just penetrates this level and goes to look for buyers from lower levels, which would bring it all the way down here probably. But as always, never believe and never anticipate. So never believe any theories or wise words from an analyst. Always go to the price action and see if it confirms the thesis proposed by somebody, because only the price action is the truth when it comes to the markets. So I really hope that this helps you guys. Leave us a comment, give us thumbs up if you like what you see, and give us feedback also, so that we can develop these videos further. So thank you for your time, and please do remember, tomorrow is an important day. Lots of PMI numbers are out, and there's usually lots of volatility on PMI Fridays. So this is an opportunity for us to prepare and really take the advantage of those movements and swings that are likely to take place in the markets. But as always, trade safe, never trade without stops, and I see you soon on the next video.